Now, if I have to talk about country diversification, what are your views on it? How do you manage it in your own portfolio? And how should we basically go about country diversification in our equity portfolio?
See, I would say, I would put it this way. It is very important, and it is also equally true that everybody has a massive home bias, and there's nothing wrong with it, because you understand India, you're likely to have more confidence or more comfort investing in India. Operationally, it is more easy, right? Sometimes regulations prevent you from investing outside, or force you to invest in a certain place. So let's theoretically assume that all those constraints are kept aside and you have no constraints. You are free to invest wherever you like. If I was free to invest wherever I like and however much I want, I would put 40% in India, 40% in US, and 20% in other emerging markets.
Okay.
Right? I'll tell you why. Because if you see what is the reason for investing in US or investing in other emerging markets. So take S&P 500. From what I have seen in the past, S&P 500 profitability, 40 to 50% of the profitability is America onshore, and 40 to 50% or 50-60% is global. Right? So somehow, and America is obviously the mecca of all innovation and stuff, right? And it's a truly global market. Then you look at other emerging markets. So there are very many other emerging markets, like say for example South Korea or Taiwan. They are high-tech semiconductor. If you take Middle East, it is oil. There are some other markets like Indonesia, Brazil, maybe even Australia for a moment, because they are commodity driven. So there are some which are export oriented. So there are some emerging markets which are complementary to India, which will give you exposure which India cannot give. And India, US, and other emerging markets. That is how I would look at it.
So your portfolio mix is also somewhere around that 40, 40,
I have
20?
not got to it as yet. Like everybody else, even I have a very, very high India bias, correct? But yes, I do have exposure to US and emerging markets, yes. Like, because my own firm manages a global emerging markets fund, so yes, emerging markets I am taken care of. But US I have found it challenging in the last couple of years, so I have to still act on that.
Which are emerging markets, if I may ask?
See, emerging markets meaning, say for example, my firm manages a emerging markets fund, and that invests the universe. If you technically look at MSCI Emerging Markets Index, the universe is 27 countries. But obviously you will not necessarily find all 27. You will find large exposures to say China, and China also on a surrogate basis, because you may have some exposure directly to China, or you may have exposure to say a lot of European companies. They derive 30-40, like if you see luxury goods, if you see apparels, fashion, a lot of European brands derive some 40-50% of their revenue and profitability from China. So indirect way to bet on Chinese consumption is to buy European businesses. But anyway, coming to your question, it would have exposure to China, it would have exposure to Latin America, Eastern Europe, parts of Asia like South Korea, Taiwan, Vietnam, those kinds. Yeah, so other emerging markets basically.
So if we talk about your own asset mix in terms of equity, real estate, debt, how does it look like?
So clearly I have been working and earning for 25 years now. So what I do with my experience or with my background may not be relevant for everybody who's listening to us. But since the question is to me, I have to answer honestly for myself. So for me, it is half equity, half real estate.
Okay.
Right. And within equity at this point in time, I have reached at about 15% into other emerging markets. US as of yet is negligible, but I'll build it over the next 2-3 years.
Okay, so 100% in equity, and out of the 100% in equity, 15%
15 to 20%
is in emerging, 85 is in India.
Yeah.
Okay, and nothing in debt?
I don't invest in debt other than what I need to put in liquid funds or.
Okay, got it.